Good morning, traders. This is Frank Cholly with MF Global coming to you from the Chicago Board of Trade. Monday morning, August 29th, with early calls into grains. In the overnight market, grains are higher across the board. We have corn expected to open 7 to 8 higher, soybeans 12 to 14 higher, and wheat 4 to 5 higher. In the outside markets, we have the equities up. We have the crude oil up $1.50 to $2, somewhere in there. Gold's up, silver's up. We have the dollar down and the treasuries down. Those two big safe havens are down. Gold, always an argument for gold to trade higher. Today it's not down with the other safe havens, but it looks like one of those risk-on days today. Now the grain markets are pricing in lower yields. A couple private forecasters came out last week lowering yields in the corn and the soybeans. Now we saw, I think, kind of a big surprise here. One forecaster comes out with corn yields about 148 bushels per acre. The lowest we saw last month was around 152, 153, and the USDA is expected to further lower yields as well. I believe they were in at 153 last month. So crop conditions expected to show some further deterioration, another 1 to 2% decline in the crop conditions this afternoon. We'll see if we get a confirmation of that or not, but that's what the market's pricing in. Now, obviously, some rationing needs to take place, and that's why these levels are where they are now. Corn, December, somewhere around $7.75. Soybeans, November, around $14.36 or so. So that's what's going to happen at these levels. Now, I don't know how much more it needs to go just yet, but we know that we had a lot of damage from the hot and dry July, and we're starting to see a little bit of confirmation now. As we move on, we'll see some more of that. I think eventually prices for corn have to go back and test $8. We are at historically high levels, and I don't think there's a lot of downside here, but the market may be getting a little ahead of itself just now. So we would look for some pretty decent resistance, if not right at this 775 level, 780, 785, then somewhere between 790 and $8. These corn should run into some pretty good resistance. Longer term, I do think those levels need to be tested and perhaps even go higher, depending how low these yields get. The weather moving forward is not very favorable. It looks like there's more dry weather coming. Maybe not the extreme heat that we saw, but we're going to see some more dry weather. We'll probably see a continuation of the yield being reduced there. So again, at these levels, I think rationing does take place. We could see a bit of a pullback after the rally that we've seen. However, longer term, I'm still very bullish, and I think that prices do need to go higher from these levels, but I don't know that that happens immediately or later down the road. First notice day is this Wednesday for September corn futures, so that could play a role in the market. This past Friday was option expiration. A lot of times, the market makes a move right before and after the option expiration, but we have the outside market support. We have very bullish technicals on the chart. We have very bullish fundamentals in the field, so prices are likely to remain strong. Now, if you have any questions or comments, please feel free. Send me an email. Put your comments out there on YouTube. I appreciate the input, and if you'd like, please give me a call, 866-231-7811. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.